the theory of constraints that the bottleneck has to be exploited. The bottleneck has got limited number of hours. So how do we exploit it? By selecting those products which gives the maximum throughput contribution per hour of the bottleneck resource. So each hour the bottleneck works, the throughput contribution will be high. And the aim of throughput accounting is to maximize the throughput contribution. So in today's class, we will see how to find out the optimum product mix under throughput accounting. So as I said, we have to select those products which have got the maximum throughput contribution per hour. And throughput contribution per hour is known by the name return per hour, given by throughput contribution divided by the product's time on the bottleneck. So that is the first throughput accounting ratio that you have to learn. And we know that we have to select those products which have got the highest return per hour or the highest throughput contribution per hour. So let's get to the details of the question. So these are our two products, slippers and shoes. The selling price is $15 for the slipper and $20 for the shoes. And the direct material cost per unit is $10 for the slipper and $11 for the shoes. And the time taken on the bottleneck, hours per unit, is 2 hours for the slipper and 6 hours for the shoes. It means that for making one slipper, the bottleneck has to work for 2 hours. And for making one shoes, the bottleneck has to work for 6 hours. So we have to decide whether to manufacture slippers first or shoes first. So the guiding factor is find out the return per hour of both the products. So return per hour, we know it is throughput contribution divided by the product's time on the bottleneck. So we will first find out the throughput contribution. So what is throughput contribution? Selling price minus direct material cost. So throughput contribution for the slipper is 15 minus 10, that is $5. And for shoes, it is 20 minus 11 or $9. So we've got the numerator. Now the return per hour is throughput contribution divided by the product's time on the bottleneck. So the return per hour will be throughput contribution for slipper is $5 and the product's time on the bottleneck is 2 hours. So return per hour is 5 by 2 or $2.5 per hour, which means that slipper will generate a throughput contribution of $2.5 for every hour that the bottleneck works. Now coming to the shoes. The throughput contribution is $9 and the product's time on the bottleneck is 6 hours. So return per hour is 9 by 6 or $1.5 per hour. So which is a better product? Obviously, it is the slipper because it has got a higher return per hour. So we will rank the products. So rank 1 is to slipper and rank 2 is for the shoes. So now we have studied the return per hour or the revenue side. Now we will go to the cost side. So the second ratio is the cost per hour given by the total factory cost divided by the total time available on the bottleneck. And what do you mean by the total factory cost? That is nothing but the total fixed cost. And fixed cost, we know any expense other than direct material is a fixed cost. This is something that we learned in the previous class. And we divide it by the total time available on the bottleneck to get the cost per hour. Now, the last ratio that you have to learn is the throughput accounting ratio or the TPAR. And here we compare the return with the cost. So what is the formula? It is the return per hour divided by the cost per hour. If it is greater than 1, it means that the returns exceed the cost. And if it is less than 1, it means that the returns is less than the cost. So let's get back to the details of the question. So we have already calculated the return per hour. Now, the question further says the total factory cost is $128,000. Factory cost, as I said, it is nothing but the total fixed cost. And bottleneck hours is 80,000 hours, which means that the bottleneck can work only up to a maximum of 80,000 hours. So we will calculate the remaining two ratios. Now, the cost per hour is given by the formula, the total factory cost divided by the total time available on the bottleneck. So total factory cost is 128,000. That's the numerator. And the total time available on the bottleneck is 80,000 hours. That's the denominator. So the cost per hour is 128,000 divided by 80,000. So it is $1.6 per hour. And it remains the same for slippers and shoes. That is, whether we are manufacturing slippers or shoes, the cost per hour remains the same. And what was the third accounting ratio? It is the throughput accounting ratio, or the TPAR, given by return per hour divided by cost per hour. So the TPAR is return per hour for slipper is 2.5 and the cost is 1.6. So TPAR is 2.5 divided by 1.6 or 1.56. And for shoes, it is 1.5 divided by 1.6 or 0.94. Now, we had ranked the products based on the return per hour. We could rank the products based on TPAR also, because it will give the very same result as the denominator of both the products remains the same. So based on TPAR, what is the ranking that we have to give? Rank will be 1 for slipper and 2 for shoes. That is, we have to manufacture slippers first and then we have to manufacture shoes for maximizing the throughput contribution. So always note that we could rank the products either based on return per hour or the TPAR. Both will give the same result. But you need to calculate TPAR only if it is asked in the question. If you are just asked to rank the products, then you can rank it based on return per hour. You can save on these 2 additional steps. But if they have specifically asked you to calculate the TPAR, then you will have to calculate it and then rank the products. Next, we will go to the optimum product mix, or the quantity of slippers and the quantity of shoes that we have to manufacture. So let's get to the details. So the time taken on the bottleneck, it is 2 hours for slippers and 6 hours for shoes that we already saw. Now, the maximum demand of slippers is 25,000 units and for shoes is 30,000 units. And the bottleneck hours in total is 80,000 hours. So we will start with the answer. So the units that are to be produced of both the products and the hours taken. So these are the 2 rows that we need. And in the outer column, we will write the total available hours. That is 80,000 hours is available in total. So first we are going to manufacture slippers. Why? Because it has got rank 1. Now, how many units of slippers should we manufacture? Maximum we need to manufacture only 25,000 units because that's the demand. So we will manufacture 25,000 units. So we will write 25,000 units are to be manufactured. And what is the hours taken? 1 unit takes 2 hours. So 25,000 units will take 25,000 into 2 or 50,000 hours. So we will reduce 50,000 hours from the total hours. And now the balance hours is only 30,000 hours. Next, we will manufacture shoes. So 1 shoe takes 6 hours and the maximum demand is 30,000 units. So how many hours will be taken? It is 6 into 30,000 or it will take 180,000 hours. But do we have 180,000 hours? No, we have just 30,000 hours left with us. So in 30,000 hours, how many units of shoes can we produce? It is 30,000 hours, which is the total hours, divided by the hours taken for the shoes, that is 6 hours. So the number of units is just 5,000 units. So what is the optimum product mix? We have to manufacture 25,000 units of slippers and 5,000 units of shoes. This is the product mix which will give the maximum throughput contribution. So we've arrived at the final answer. Let's have a quick recap of the throughput accounting ratios that we learned today. So the first throughput accounting ratio is the return per hour, that's the revenue part, which is given by throughput contribution divided by the product's time on the bottleneck. Now going to the cost part, the cost per hour is the total factory cost divided by the total time available on the bottleneck. And the third ratio is we are comparing the revenue and the cost, which is given by return per hour divided by cost per hour. If you notice here, the way in which we've calculated the optimum product mix is similar to the method that we adopted under marginal costing for single limiting factor. Now, in a question, how do we know whether we have to calculate under marginal costing or under throughput accounting? If you have to adopt the throughput accounting approach, it will be specifically mentioned in the question. If it is silent, then always go for the marginal costing approach. That's the single limiting factor. Do watch that video too, so that you will get a complete understanding of throughput accounting limiting factor and marginal costing limiting factor. The link of the same is given above. With this, we come to an end of today's session. I hope you've understood how to calculate the optimum product mix under throughput accounting. If you have benefited from the video, do click the subscribe and the like button, and do share it with your friends whom you feel will benefit from the video. So thank you all, and meet you in the next video.